right, for those of you just joining, check the chat. I have a couple updates there and a couple logistical things to note. The most important one is just to leave comments in the chat, and towards the end of the talk today, we will go through those questions. Yeah, we have 2 minutes, so I might as well start. Kate says, why the change in title? Good question. I think that the main reason why I want to change the title is because this audience is going to be coming from the startup world. And so I decided to deliver a pretty similar message, just with a slightly different frame of mind. And that frame is to describe Bitcoin as if it was a startup and sort of speak the language of your audience. That was the motivation. But if you're here for the why Bitcoin and not blockchain idea, don't worry, that's going to be embedded pretty hard into this presentation because it's something I'm passionate about. And I think there's a lot of misconceptions there. So I feel it is my duty to cover those. Hopefully that's a good answer for you, Kate. Kate says she's more interested in the technical aspects. Okay, so I'm not going to go too deep into the technical aspects, and it's not because I don't think, or it's not because they're things I don't really have a grasp on, but mostly because the broad audience that I assume will be here today probably won't find it as interesting. And I also think that the sort of the political implications or what Bitcoin means from a social, social political concept is actually more important than the underlying technology. And I do explain why I think that on the first third or so of the presentation. And yes, happy to. All right, everyone, it is 12:30 and I'm going to get started here. Everyone can see the screen, and here we go. So the title of my talk today is Bitcoin is Freedom Money. And as I sort of already touched on as we were just warming up there, what I'm going to do is pitch you Bitcoin as if Bitcoin was a startup. So we're going to cover things like what is the problem, how Bitcoin's a solution, the marketing, what's the total addressable market, the risk, cap table, etc. And like I mentioned again in the interview or in the preview is I will cover Bitcoin, not blockchain, and why I think that's important as well. So yeah, let's get going here. So first off, who am I? Why should you even listen to anything that I have to say? I'm a U of M grad from 2010. I first heard about Bitcoin in 2011, but like most people, I dismissed it as this magic internet money thing. I didn't really think of it as anything to be concerned with. Then I spent 4 years in enterprise software at Oracle, actually working at the downtown office here in Minneapolis. Then I left Oracle and spent 3 years as an online entrepreneur, writer, and speaker, primarily in the wellness and digital marketing space. And then for the last 3 years, I've been working full-time in Bitcoin land. And currently I work at Swan Bitcoin, which is an easy way to get started buying Bitcoin. And if you are curious about this, you can go to swanbitcoin.com/Quittem and you'll get $10 worth of free Bitcoin for signing up. All right, here we go. So the problem, what is the problem? So the problem is that the money is broken. And most people don't really think about money, what it means, why it's important. But money is actually an extremely important tool. And you can think of it like a foundational element of society. It's used as a coordination device for people all around the world. And what this root layer technology does is it provides social scalability. And social scalability is a term coined by Nick Szabo. And what this term means is essentially the ability for humans to cooperate flexibly in large numbers across space and time. And so you can just think of it, how good do humans cooperate? And money improves cooperation, which has all kinds of downstream effects that are really important for society. And the foundational element with money that needs to be known and sort of internalized is that it's all based on trust. And so, how do I know that the money you're giving me is real? Well, I trust it because we put a king's face on the money, or we put a president's face on the money. Or another example would be you trust your bank, you give them some money and you hope that they give it back to you in the end. And the problem with our current monetary system is that it's run by central banks, which are an unelected private group of people. And they sort of have their own political will, and they're easily captured by whatever politics of the day are influencing them. And that has all kinds of downstream effects that aren't necessarily good for the population. And also, if you look at it from a global scale, the monetary system is it's unequal depending on where you are. And so according to many different statistics from lots of sources, there's at least 1 billion people around the world that have no access to banking, and another billion people that have very little access to banking. And so it's pretty hard to compete in a global modern economy if you don't have basic financial services. The next point here is that the game is rigged. And I mean this seriously. And over time, the value of your dollar that you put in your savings account that you work hard for, it loses value. It loses purchasing power. And what happens is the central banks, they try to manage the economy, which sounds like a good thing. But the net effect of trying to manage the economy is that we see the purchasing power of the dollar decline. So we inflate the value away of the dollar. And in turn, we pump up asset prices. And you can see this by, okay, the economy is horrible right now, but the stock market keeps going up. That's because the central banks are inflating the monetary supply. They're increasing units into the system, and all those new monetary units end up in the stock market and other scarce assets. And that's a problem because it disproportionately hurts the poor people because they don't hold any assets and instead hold all their money in dollars. And so this increases the wealth gap and leads to social unrest. All right, here is a chart showing that dollar purchasing value declined by over 90% in the last 100 years. And, okay, what's the big deal? Well, the big deal is that it forces normal people to gamble in the stock market just so they can preserve their hard-earned savings so that they can retire. And gambling in the stock market's risky, and depending on your timing, it can really hurt you. And so if you remember 0809, let's say you tried to retire in 2009 or 2010, you saw 1/3 or 1/2 of your wealth disappear overnight. And I don't think it's morally fair or right to have dentists, truck drivers, and everyday normal people having to be professionals in their industry and also play part-time stock pickers just to preserve their savings. And what this amounts to is that our savings disappear. They're like ice cubes melting over time. And what this does is it steals the fruits of your hard-earned labor. And stealing the fruits of your hard-earned labor forces you to work longer before retirement because your savings buy you less in the future. And this can be looked at as a shadow tax that's actually stealing your time. And I find that to be a very, very bad thing. And you might ask, okay, why, if this is true, if what I'm saying is true, why are we okay with this? And the short answer, noticed by Henry Ford about 100 years ago, was that nobody really understands the money and banking system. For if they did, there'd be riots in the streets by morning. Here's a chart taking a look at productivity versus wages. And what you can see here is that since 1971, our productivity as a human race has skyrocketed. This is based on things like technology, software, machines, all kinds of things like that. But at the same time as we're producing more and we're way more productive than we've ever been, our wages are stagnant. And this is a problem. And what this means is that we left the gold standard in 71, which gold is a scarce asset, which we based our monetary system on for a long time. And scarcity is really important. I'll get to that in a minute. But essentially the government leaving that tether to reality, that tether to a scarce amount of units, what that does in net is enables governments to print as much money as possible for whatever they might need it for, whether it's never-ending wars in the Middle East or bailing out their banker friends or whatever the flavor of the day is. And again, anytime the government prints new money, it disproportionately hurts the poor. And Satoshi, the pseudonymous creator of Bitcoin, understood that the root problem was trust. And so he made this famous quote in, I think, 2010 or 2011. And finally, after 30 plus years of cryptography nerds, hackers, internet pioneers, and finally the cypherpunks, we have money native to the internet. And so this was a 30 to 50 year race trying to find this native money to the internet. And Satoshi launched Bitcoin in January of 2009. So right about during the 0809 financial crisis. And in the very first Bitcoin block, Satoshi embedded a message that said, chancellor on the brink of a second bailout, which was the newspaper heading of that day, again pointing to the political motivations. And that newspaper headline was referencing the UK bailing out another bank, again hurting the normal people. And so Satoshi, we hypothesize, had this political motivation, but it also served as a timestamp saying, hey, I launched Bitcoin on this date and everything's fair. Now that we understand the problem, the money's broken, let's talk about the solution. And the solution is that Bitcoin fixes this. Bitcoin is both a money and a network, which is somewhat confusing. But to focus on the money side, Bitcoin has unique monetary properties. Some of those are that it has a fixed supply. There will only ever be 21 million. It's an open system. Anyone can participate. There's no gatekeepers. It's borderless. So wherever you live, even if you're under economic sanctions, you're able to use Bitcoin. It's neutral. So you can trust, you don't have to trust the person you're working with because you trust the system. It's censorship resistant, meaning that if the government or PayPal doesn't like what you're doing with your money, they can stop you. However, if you use Bitcoin, you're in charge, no one can stop you. And yeah, and it's also global. And so anyone with an internet connection anywhere in the world, as long as they have a mobile device, they can send money to anyone else instantly with no permission from anyone. And this fundamental fact is going to make a big dent in the world. And so, like I said, scarcity is baked in. There's 21 million units. That's a fixed supply. That's all there'll ever be. And what Bitcoin does from a political aspect, which I think is the most interesting, is that it seeks to separate money from state. And this is just like removing religion from state. And the point is, some things are better off not run by our governments. And so using Bitcoin is essentially saying, I trust code instead of central bankers who don't necessarily have our best interest in mind. And it's pretty easy to say and clear for most people to say that things just aren't working economically for many people around the world. And that's where Bitcoin comes in as a monetary revolution. And as we say in the Bitcoin community, kind of tongue in cheek, but also serious, is fix the money, fix the world. All right, what about the blockchain? The blockchain is the buzzword of the day. It, in my opinion, gets a little bit more press than it deserves. And the reason is the blockchain was purpose-built by Satoshi to enable money. And all the blockchain aspect is a time-linked database. And the blockchain itself, it doesn't actually offer the unique properties of Bitcoin like a fixed supply or censorship resistance or sort of a central bank run by software instead of bankers. And so what Bitcoin is a combination of many different technologies. You can think of it like a Franken technology. Satoshi took pre-existing tech, bolted it all together, and this constellation of technologies is what imbues the properties that make Bitcoin valuable. Some of those technologies are a peer-to-peer network, a proof of work mining algorithm. We use SHA-256, public-private key encryption, and a few other little things that all stitch together. And what this provides and what the fundamental innovation here is the invention of digital scarcity. And what does digital scarcity mean? So if you think about how we use computers and the internet today, if I text you a picture of a mushroom I saw when I was foraging, you get the picture, but I didn't actually send you the picture. I sent you a copy of the picture. And so what Satoshi did was able to say, if I send you that picture, you have it and I no longer have it. And that's what's called the double spend problem or the Byzantine generals problem. It was a 50-year ongoing computer science program that Satoshi solved by stitching together all these different technologies to make Bitcoin. And so, again, it's a monetary revolution, much more than it is a technological breakthrough. And again, just to hammer the point home, it's Bitcoin, it's not blockchain. Bitcoin is open, global, borderless, censorship resistant, freedom money. All right, let's talk about the team. So who's on Team Bitcoin? Well, the short answer is everyone and no one. It was created by a pseudonymous founder, as we mentioned. And Bitcoin is what's called a free and open source software project. So anyone can join and participate. The code is open source. You can go look at it, you can copy it, you can play around with it. There's no leader, it's completely decentralized. And if you feel compelled to work on it, you just join the social group of people working on it and contribute your ideas. And if they're good, they'll get added to the system. And what this has done, because it's such an interesting, unique, and hard problem, is it's attracted the best protocol developers on the planet working for Bitcoin. I would put the Bitcoin developers against the NSA, the CIA, or any other group of good developers you can think of. The Bitcoin protocol developers are superior. And what's interesting from a team perspective with Bitcoin is that there's no formal team members. Instead, what Bitcoin does is it captures our imagination because it's unique, it's world-changing, and also has the potential to make people wealthy. And so it captures imagination, and we see all these people from different industries flocking into the Bitcoin industry. It's a brain drain. And where the brains go, you can assume in the future that's where value will be created. And so Bitcoin incentivizes people to become investors, who then become marketers and educators, and also attracts lots of entrepreneurs who see this opportunity. And so all the best thinkers, builders, innovators are coming here, and all the little ecosystems I've been a part of, Bitcoin is the most interesting and the most diverse, and it has the most intelligent people. Here's one of my favorite quotes by Ralph Merkle. And Ralph Merkle is the creator of the Merkle tree and just a famous cryptographer. And he essentially said that Bitcoin is alive. It's a new form of life form that pays people to do its bidding. And this is a very fascinating angle because from a social structure element, Bitcoin does appear to be alive. It gets attacked and then it learns. It incentivizes people, it grows. And I've done a lot of writing on this topic comparing Bitcoin to mycelium, which is part of the fungal kingdom, which you can find on my website at brandonquittem.com. Next, let's talk about product market fit, or in this instance, protocol market fit, because Bitcoin is a protocol, just like email protocol, SMTP, or HTTP, hypertext transfer protocol. And eventually it's just going to be a protocol built into the internet. But from a protocol market fit standpoint, let's do that. So the problem is that money is broken, and Bitcoin solves this problem because it's better than all previous forms of money. And when you look at other blockchains, which there are now 7,000 or something like that, the other blockchains are still seeking product market fit. I'm not sure what will come out of them, but it's best to treat them as experiments. So why do people like Bitcoin? Why do I think that there is a protocol market fit? Well, number one, it's already attracted over $200 billion stored in Bitcoin today. And people like Bitcoin because it's a neutral store of value, considered digital gold. It can be used as a hedge against global uncertainty, which 2020 has shown us there's a lot of. And it's also a hedge against inflation, as we talked about in one of the early slides, censorship resistance, seizure resistance. And at the end of the day, Bitcoin is freedom money. Let's talk about marketing. So as we mentioned before, as a free and open source software program, Bitcoin incentivizes Bitcoin holders to talk about Bitcoin with friends and families. So there's this constant growing of the network organically. You feel compelled, you learn something new, you might become wealthy for investing in it. So a lot of people get excited and they share with their friends and family. But also on a more technical level, Satoshi actually engineered a positive feedback loop or a viral loop into the protocol. And that's demonstrated here in this graph. And the short answer here is that Bitcoin has unique monetary properties, which leads people to buy Bitcoin, which causes the price to rise. And when the price rises, the miners, who you can think of as like the security and the accountants of the network, they're sort of like hired by the network, they become more profitable as Bitcoin increases in price. And if the security is more profitable, then the network's better, it's more secure, which makes the network more valuable, which causes the price to rise, which causes the miners to be more profitable, better security, et cetera, et cetera, et cetera. And uniquely, Bitcoin's security budget scales up and down with the price. And so if it's 100 times bigger, 1,000 times bigger, Bitcoin's security budget will scale. Here's another quote from Satoshi, and this is just sort of demonstrating the fact that he understood this viral loop very early on. So Satoshi was not only a good engineer and sort of a polymathic thinker, but he was also a good marketer. All right, let's talk about the competition. And there's lots of different things we can consider competition for Bitcoin, but the quick thing to understand is that Bitcoin is unique. Okay, so I'm going to run through a couple high level things here. Bitcoin versus gold. Bitcoin is far superior because Bitcoin is actually transportable. Imagine trying to move a bunch of gold around. You got to hire a private jet. It takes a week. It costs hundreds of thousands of dollars. Where you can send $100 million worth of Bitcoin in 30 minutes across the world, no problem. Next, gold does not have a fixed supply. Gold supply inflates by about 2% historically. What about gold versus fiat? And by fiat, I mean government money like dollars, euros, and yen. Again, looking at that purchasing power graph, fiat money loses value over time. It's also highly politicized. It's a rigged game, doesn't serve the people. What about Bitcoin versus other cryptocurrencies? So, like I mentioned, there are thousands. But if you look at the total market cap of the whole ecosystem, the vast majority is stored in Bitcoin. And that's who has the brand. And again, brand is important because trust in your money is very important. And also, it's important to note that money is a network technology, just like social media. And so, what network technologies mean is that they tend to form monopolies. They're kind of a winner take all or a winner take most market. And I like to say Bitcoin is like Usain Bolt with a 50-mile head start, which I heard recently from Vijay Boyapati, a great thinker in the Bitcoin space. And the rest of these cryptocurrencies should be more considered like experiments. What about other store value? So real estate, wine, art. These actually have done really well the last 10 years, but they're not as good as Bitcoin because they're extremely illiquid, meaning it takes a very long time to find a buyer for your rare art or your wine collection. And they also have a very high cost of carry, meaning what is your annual expense just for holding these assets? Think property tax or storing and appraising your wine, things like that. Next is Bitcoin versus Libra, which is Facebook's digital currency, or central bank digital currency. So the question is, what if big governments or big tech create some sort of crypto? And the short answer is that they will. They absolutely will within the next 5 years, if not sooner. But they won't have the unique properties, monetary properties that Bitcoin has. Instead, they will be highly inflationary, highly controlled, highly politicized. And so rational actors will choose Bitcoin. So over time, Bitcoin will outcompete, and that's how the value goes up. So here's another quick chart on monetary properties. This is pulled from Vijay Boyapati's article, The Bullish Case for Bitcoin. And it's kind of just looking at the different aspects that make money popular or make money valuable. A couple things to point out. Gold is not as good as Bitcoin due to the portability and the auditability. We don't actually know how much gold's in Fort Knox. A lot of people think that we don't have it anymore. And the big problem with fiat money is that it's not scarce, so it leads to rampant inflation. And then if you look at Bitcoin, the big knock there, we got a D score for the established history. And that's fair. Bitcoin's only 11 years old. We've been using gold for thousands of years. However, with each passing year, more people trust Bitcoin, and that's only going to continue. And interestingly, millennials, there's been polls done on this. Millennials choose Bitcoin. They trust Bitcoin more than gold. And so, as generations turn over, it's very clear that the young people don't want shiny rocks. They're native to the internet. They understand digital value. And so they're going to choose Bitcoin. What about some risks with Bitcoin, right? It sounds crazy. It's a big idea. There's lots of things that can go wrong, and I will try to address some of the popular ones here. So the first one is, what about another cryptocurrency? And this sort of comes from the idea of Facebook versus MySpace. Like, how do we know another technology is not just going to come in and pass up Bitcoin? So a couple things here. One, with this analogy, MySpace's peak, it was 2% of Bitcoin's market cap. So Bitcoin is way past where MySpace ever got to. And with these network technologies, once you get to a certain point, it sort of runs away and it can't be caught anymore. And what about like, can't we just improve Bitcoin just a little bit better? And that's true typically with tech, but the reality is Bitcoin was actually the 5th major attempt at digital money. It's been attempted for 30 years or more. Previous attempts were eGold, Hashcash, B-Money, Liberty Reserve, and they all failed or got shut down, mainly because they were centralized. So as soon as these systems got big enough, government knocked on the door and said, hey, shut it down. And so they did. But with Bitcoin, no one's in charge. You can't shut it down because the software is replicated on millions of computers all around the world. It would be impossible to kill Bitcoin. What if the government went back to the gold standard? That's actually a reasonable way to try to fight back against Bitcoin. However, I don't think it's very likely because governments get a lot of power from this money printer. And so I don't think they're going to give that up. Okay, what about if Bitcoin gets hacked? It's software, code gets hacked all the time. Reasonable concern. However, after 11 years of existing with 99.99% uptime, Bitcoin has still never been hacked. And there's a $200 billion prize, which is the market cap of Bitcoin, for anyone to try to hack it. And yet still no one can hack it. And so it doesn't seem likely, but even if Bitcoin did get hacked, the users of the network can fork the network, meaning clone it and create a separate network. And that would essentially render the hack useless. That's the nuclear option, but it will save Bitcoin if it needs to. Another risk is apathy. So I find this to be a real risk. Everyone's busy. A lot of people are time poor. It's hard to learn about new things. People are resistant to change, etc. However, when thinking about this a little bit deeper, what we know is that history happens in waves. History is not linear. You can think of what happened between 2010 and 2019, essentially nothing. And then you look at 2020 and everything seems to happen. And if you look at Bitcoin's growth patterns, events like financial collapse or 2020 or anytime a currency fails, what happens is that the people wake up and they start to do their research because it serves their best interest. So by and large, humans are logical and we change when we need to. But still, Bitcoin's hard to use. That's true. But do you remember the internet in 95? Pretty hard to use. It will get easier. And the next risk is that government crackdown. This is probably the most popular concern, and understandably, but don't take my word for it. I'm going to run through what a few US politicians had to say about Bitcoin. So first one, congressman from Ohio famously said, there's Bitcoin and there's shitcoin. And what he means by this is that Bitcoin's actually unique in the fact that it's decentralized and can't be shut down, whereas the other cryptocurrencies don't necessarily have these properties. And so he sort of notices the difference between the two. Congressman from North Carolina, Patrick McHenry, acknowledges that Bitcoin is an unstoppable force, can't kill it, again, recognizing Bitcoin's survivability. Senator from Idaho, Mike Crapo, even if we tried to ban it, we couldn't. And again, this speaks to the fact that it's a decentralized network. You can go back to the case study of Napster versus BitTorrent. So both file sharing services, except Napster was centralized. As soon as it got big enough, they shut it down. And then a couple years later, BitTorrent pops up, which is peer-to-peer. And what happened is BitTorrent's still around. It's extremely popular and you can't kill it. Bitcoin's the same way. Next, this is probably my favorite example, Congressman from California, Brad Sherman. So Brad actually understands Bitcoin pretty well, and it's no secret that he hates Bitcoin. And the reason is he notices that Bitcoin seeks to take power away from overreaching governments. That's absolutely true. And Bitcoin's going to take power away from governments and give it back to the people. And if anyone remembers their Greek mythology, you might remember Prometheus, who was a god who got in trouble for stealing fire from the gods and giving it to the people. And in the same way, Satoshi stole fire, stole money away from the gods, the central bankers, and gave it back to the people. And once it's done, you can't put it back out. It's, once the genie's out of the bottle, there we go. Here's a chart looking at freedom in the world. And it's really, really important because according to the Human Rights Foundation, 54% of the world's population, 4.2 trillion people, are living under some form of authoritarian regime. That's not good. And Bitcoin is freedom money. It empowers people living under authoritarian regimes to come out from underneath the boot heel of their government. And so it's my belief that we could use a little more freedom in the world. And if you look at the countries on this map that do not have much freedom, interestingly or obviously, it's clear that they all are adopting Bitcoin because it is an escape hatch for those people. Very cool. Next, with any investment, we want to know what the total addressable market is, like what kind of a return can you expect with Bitcoin. So based on my assessment, Bitcoin's TAM is between 10 and $100 trillion. Let's look at some comparable assets. So today, Bitcoin is $200 billion. Gold is about 9 trillion, which is 45 times bigger than Bitcoin. And the next market would be total market for store value. This includes real estate, government bonds, gold, etc. That's about 250 trillion. So that's about 1,000 times bigger than Bitcoin. And so now that we have some scale, you can kind of think about where does Bitcoin fit in. It's my belief that Bitcoin is digital gold, so it's going to eat it's going to eat gold's lunch and more or less replace it as a store of value. And then after that, start eating into the global store of value market. So again, somewhere between 10 and 100 trillion. And that's a lot of upside. So between 50 and 1,000 times your money is what we're looking at today. People always say, oh man, since Bitcoin went to 20,000, I must be late. I missed the boat. And funny enough, pretty much everyone who gets into Bitcoin thinks this way, but it's just simply not true. Seriously, if you're listening to this presentation today, you're still early. And you can look at some comparisons to the internet here. 0.4% of the world's using Bitcoin, maybe a little higher now, but point being is there's a long way to go. Jack Dorsey quote, one of my favorite entrepreneurs, he famously said Bitcoin's going to overtake the dollar. And interestingly, Jack owns a couple businesses. One of them is Square, and one of Square's product is the Cash App, which is essentially a bank in your pocket, a mobile bank. And Jack sells Bitcoin on Cash App, and in Q2 of this year, he sold $300 million worth of Bitcoin, and it's growing very, very fast. Go look at the public financial statement there. It's pretty incredible to see. And famously, Jack in his Twitter bio has one word, Bitcoin. So it's clear that this entrepreneur sees the future, and he's helping to realize that future with his companies. Here is a log chart of Bitcoin's price history. And a log chart or a logarithmic chart is needed because Bitcoin's price rise is exponential. And so although this chart looks, somewhat linear, it's actually a never-ending exponential chart. And also to point out here is there are 4 peaks in Bitcoin's history. And each time there was a peak, Bitcoin went up, 100x or 50x or something like that, and then retraced by about 80%. And it's on that 4 times, but most people only remember the 2017 bull market because that's when Bitcoin hit sort of mainstream consciousness. And most people in Bitcoin now believe that we're in the beginning stages of another bull run. And if that happens, it's my belief it'll probably go off the chart here that you're seeing. Although I'm not here to give financial advice, that's my belief. Here's a chart with some compound annual returns showing how the longer you hold Bitcoin, you start to see some pretty insane compounded returns. Again, these are compounded annually, and that's very, very powerful. Okay, you understand the company, the product, the team, the market, the marketing, the viral loops, etc. How can you get involved with Bitcoin? So first of all, it's the best performing asset of the last decade. As a rational person, it's time to get off zero, meaning zero allocation to Bitcoin. We can argue about should you hold 0.1%, 1%, 2%, or 10% of your wealth in Bitcoin. There's lots of arguments for those numbers, but 0% allocation is not the right answer. And if you don't own any Bitcoin, I encourage you to buy, $10 worth or something, because what happens is where your money goes, your mind follows. So get a little skin in the game and you'll start to pay attention. You'll learn over time and get more confident. That's how most people got into the space. And with Bitcoin, a very small allocation, even 1% of your portfolio can have an outsized return, which is called an asymmetric bet. That's what you look for with investments. And Bitcoin's also a non-correlated asset, which is great for your portfolio. And then finally on this slide, Who's on the cap table of Bitcoin? There's a long list of very, very famous tier one thinkers, investors around the world who all own Bitcoin and publicly sing its praises. So you're joining the winning team here, and over time, people will continue to wake up to this. It just requires a little effort to learn what's going on here. Okay, let's say you did want to get involved. I'm a little bit biased here, but I definitely recommend swanbitcoin.com. And, I use this product. I love this product. Obviously I work here, so I'm biased, but we launched it 6 months ago. We already have thousands of happy customers. We're using a licensed and registered custodian, growing fast. And our main product at Swan is just a very easy way to get started buying Bitcoin. It's an automatic recurring buys program in the same way that you automatically allocate to your 401k every month. You do this with Bitcoin, sort of a set it and forget it model. So 3 steps: connect your bank account, select your plan, $50 a week, $100 a month, or $10,000 a week, whatever you want to do. And then Swan will auto pull from your bank account, convert it into Bitcoin, and then you can keep it with our custodian, or you can take control of it yourself. Either one is totally fine. That's Swan. And so now the final slide, sort of next steps. I encourage you to join Bitcoin, but a couple next steps. So first one, invest in yourself, and that's the most important thing you can do. So learn, figure out what's going on here, see into the future, don't get caught off guard here, and get off zero. So buy $5, $10 worth of Bitcoin. There's many ways you can do that. I obviously recommend Swan/Quittem. And if you go there, you'll get $10 for the free Bitcoin for signing up. And then 3 different articles I highly recommend reading: The Bullish Case for Bitcoin, The Bitcoin Standard, which is actually a book, a very good book. And then I wrote a series of articles called The Mycelium of Money, which is comparing biological networks to technological networks. It's been read by over 100,000 people. It's quite interesting. And finally, I would encourage anyone who's curious about this stuff, you can reach out to me, come say hello on Twitter, come on my website, shoot me an email. I'm happy to answer any questions that you might have. And so, all right, that is the end of the presentation. I'm going to go and take a look at some questions in the chat. So if anything came up for you guys today, please go into the chat and I will start to address them. Okay, first question here from Gurav Khanna. I hope I pronounced that right. Thanks for your question. The question is, can you explain the fork a bit more? I think Ethereum, which is another network, went through a fork. And what happens to coin holders before and after the fork? Good question. So the first thing is, a fork is, because this is free and open source software, you can go download all of Bitcoin software yourself, copy it, and create a new identical network. But what's important to note here is that just because you copy the network, let's say I made Brandon coin, same software as Bitcoin. Now, it doesn't necessarily have the same value as Bitcoin, because if I tried to convince you to buy Brandon coin for $10,000 a piece, would you do it? Probably not, because it doesn't have the network effect that Bitcoin has. And so that's sort of something to understand fundamentally. Another thing is, when you fork the network, what happens to the coin holder? So let's say I own Bitcoin and then I fork it and create Brandon coin. Typically, the holders of the original Bitcoin will also get the coins of the forked Bitcoin. And then you can sort of decide what to do. But historically, the minority fork, so you can think of it like a fork in a competition. What ends up happening is the winning fork captures all the value and the other forks essentially trend to zero. And so Garuv is right. Ethereum did fork their network. They've done it a few times, but there was a controversial one a few years ago where someone actually hacked Ethereum. And so the developers said, you know what, we're going to fork the network, get rid of the hackers' coins, and just sort of like start over, which is controversial, but I don't think we should go too deep into that one. Looks like Anne had a comment saying that the CEO of MicroStrategy also adopted Bitcoin. That's a good point. This actually happened in the last couple of weeks. The first publicly traded company in the US, MicroStrategy, which is an enterprise software company, they went out and they converted $450 million worth of their treasury. So about half of their cash reserves, they put into Bitcoin. And the CEO is going public with this, and he's sharing his reasoning, but he's essentially defending his treasury and thinks that Bitcoin is the future. And he calls it a deliberate strategy to adopt a Bitcoin standard. He's very, very bullish on Bitcoin. And why this is interesting is corporations who have cash are going to be wondering, what do they do with all this cash? Because they understand that their purchasing power is going down. They understand the government's printing new money, again, going to devalue their cash holdings. And so it's rational for a treasury to allocate some percentage of their treasury to Bitcoin to preserve their capital. We'll also probably see the same rationale play out in governments. I don't expect the US government to buy Bitcoin anytime soon, but some of these smaller nations, I do expect them to start allocating to Bitcoin in the next 5 to 10 years, maybe sooner. Okay, let's see. Another question here from Michael. Michael says, my biggest concern is the volatility of Bitcoin. Isn't there a danger to constant fluctuation in price? $1 does not fluctuate nearly as much as Bitcoin. Let's see. It's also much easier to suddenly flood the market with Bitcoin or pull a large amount from the market than you can do with cash. Good question, Michael. I think volatility is an important topic. A lot of people think about this. And you're right. Bitcoin is significantly more volatile than the dollar today. But the main reason why assets like Bitcoin are volatile is because that they're so small. And so at a $200 billion asset, it doesn't take that much to push the price around. Meaning if essentially Apple's market cap is bigger than Bitcoin's market cap, to put it in perspective, and we know how volatile Apple's share price is. And so you can think of Bitcoin as volatile because it's small. And what the data shows is that over time, as Bitcoin's market cap gets larger and larger, the volatility trends down. And so I expect that to continue to happen. And so how this is practical, well, it wouldn't make sense for you to only hold Bitcoin today as your only money. For most people, that doesn't make sense because the price can fluctuate. Instead, think of Bitcoin like a long-term savings account, just like you do a 401k or a stock. Both those things are highly volatile. And interestingly, Bitcoin's volatility this year in the last, let's say, 6 months, it's actually lower than the S&P, which I don't expect that forever, but it's kind of an interesting fact. See, was there anything else in these questions? Yeah, that's pretty much covers it. If you have any follow-ups there, Michael, feel free to comment. Great. So we have about 3-4 minutes left, it looks like, on my watch. Are there any more questions we'd like to cover before we wrap? You're welcome, Michael. I hope that was helpful. And if you want to continue the conversation, again, reach out on Twitter or you can catch me on my website. Oh, you're very welcome, Ann. Thanks for the kind words. Oh, TJ. Yeah, good point. So actually at Swan, our CTO, Jan Pritzker, he wrote a book about Bitcoin actually prior to starting Swan with us. And the book is called Inventing Bitcoin. And Kate, I know you mentioned having some interest in a little bit more of the technical side. And this book is definitely more technical. It's not going to be, it's not going to be like, you don't need to be a developer to understand the book, but it actually goes into the nitty gritty stuff about the blockchain, the peer-to-peer network and mining and stuff. And so TJ actually posted a link there, /free book, which you can see. You can go to that URL and actually download the book for free. It's sold on Amazon right now for $9, but we're giving it away to the Swan community. Excuse me. Garuv asked, is there any insurance activity around Bitcoin? I'm not exactly sure what you mean. Maybe you can add a little more color to that. But I'll try to answer it from some ways that come to mind for me. So people who put money in the bank account have FDIC insurance, which is essentially a reserve bank that says if the bank gets hacked, you get up to $250,000 depositors, so like normal users of a bank, they can get some insurance to cover the amount of money that the bank loses. And Bitcoin doesn't have exactly that right now, there's insurance products being built for Bitcoin, but currently that does not exist. But what's interesting about FDIC is it sounds really good, and FDIC works great if the bank somehow like lost your deposit or something like that. But what the FDIC doesn't insure against is a bank failure or a bank run, because let's say all the people around the world today say they want to pull their money out of a bank. All these banks are fractionally reserved, which means they only have about, let's say, 1% or 1/10 of 1% of all their deposits, aka your money, on hand. And so if everybody asked for their money out at the same time, the bank would break. This is called a bank run. It also happened in 1929 and crashed the banks and the stock market. And so in that situation, FDIC would be overrun, and it actually doesn't have enough money to pay out a bank run. And so FDIC sounds good, and it was actually created in the 30s to instill confidence in banking after the confidence was destroyed from the 1929 stock market collapse. And so it doesn't actually protect the system, but it makes people feel good. So that's my long rant on FDIC. And actually, one more thing there, interestingly, there's some unintended consequences with the FDIC, which is if your money is safe because it's insured, what it does is it distorts the market, because normal people, we choose not to shop around for a bank because they're all the same, essentially, because they're insured. Where what that does is it creates a moral hazard, and it allows banks to have lax standards because people don't shop around. So it essentially distorts market forces, which leads to worse banks that are less capitalized. And that in the end is a moral hazard because it hurts everyone. All right, so that is the end of our time. If you have any more questions, please reach out on Twitter, or you can come say hello. I think through Hopin app, there's ways to DM me. I'll keep an eye on that for the rest of the day. Oh, you're welcome, Gaurav. Thanks for those questions. And thanks everyone for joining. Thanks to the TCSW group for having me on. I really appreciate this. And I hope you guys learned something. Thanks, guys.